Well, welcome everybody. I'm David Myers, Executive Director of the Conservation Finance Alliance, and we're very excited today to have a great webinar that's going to shed some light on risk financing for nature-based solutions. So exploring the insurance sector and solutions with regard to conservation finance. And we have a really great panel here of presenters. They'll present their the work that they've been doing and some of the innovations that they're experiencing in the field. And then we'll have hopefully plenty of time for Q&A at the end. So we're gonna go straight into the presentations, and we'll start off with Cherie Gray, who is the global lead for sustainability and market development at Swiss Re Asia. And Cherie, over to you.
Thank you, David. Hi, everyone. Good morning, good evening, wherever we are. So I guess what I'd like to do first is just introduce Swiss Re and introduce insurance and why it is a very relevant topic for nature and nature-based solutions. So if we just move on to the next slide, which just talks a little bit about our priorities. And Swiss Re, we're a global reinsurer and insurer. So we work with insurers, we work with corporate clients, and we work with government on risk transfer solutions. Provision of capital and taking on risk is our core business, but we also help clients build expertise and innovate with new products and services. And I guess, so why is this topic important to us? Look, as a global reinsurer, we pay out claims in over 150 countries. But we still see that, over 70% of losses from natural catastrophes are still uninsured. Just last year in 2020, the weather-related economic losses, so that's just from storm and hurricanes, was over 160 billion US. So building resilience and reducing what we call the protection gap is very important to us. So if we go to the next slide, thank you. The protection gap is even more severe when it comes to activity associated with nature and biodiversity. So, stats that we're all familiar with, 55%, 44 trillion of the world's GDP is dependent on nature and the services it provides. And by way of example, coral reefs alone are estimated to provide 36 billion in tourism value. But there's also the resilience value that nature provides, that isn't really talked about as much. So the coral reefs, as well as providing the tourism value, are also estimated to provide 272 billion of protection for property and economic activity from storm damage. Even mangroves are estimated to protect 65 billion. So that's double the value of property compared to the reef tourism, and the lives of over 15 million people. So how can insurance help? So with those couple of examples in mind, if we can at least understand and acknowledge the benefits and dependencies on nature, we can integrate this into business planning, into our risk management and our BAU commercial decision-making. And once we assign a value to it, nature becomes an insurable asset. And if it's impacted by a specific and defined event, like a storm or earthquake, then we can insure it. So at Swiss Re, we've been doing this for a long time, over 180 years of underwriting risk, of assessing risk, paying claims, and designing risk transfer programs that strengthen community and economic resilience. And so this is just an opportunity to apply the same expertise and thinking to natural capital. The same way that we look at our property, it's an extension of protecting things that are of value. And insurance can help the public and private sector organisations because we're all responsible. So with businesses, once you recognise where your business has got dependencies on nature, you can incorporate this into your broader risk and insurance programs. You can protect against loss and business interruption, maybe in the same way that you're currently taking out machinery breakdown covers. And with investors, we all want to encourage more resilient and green infrastructure. And a lot of this is catalysed with donor funds on a small scale. So in order to attract more private investment, these projects need to be designed and managed in the same way with the same assurances as traditional grey infra projects. And for governments, an insurance program means that there are always funds for cleanup and recovery after a natural catastrophe without delay, and importantly, without having to redirect funds from other projects. So the next slide just shows that last concept in a little bit more detail, the pre and post-event activity. So pre-event planning with active risk mitigation and insurance, whilst it does require more effort upfront, it's going to ensure faster access to funds after the event than waiting for donors, and also be much more palatable than raising taxes or introducing a new levy. So I'll just share briefly a couple of examples of that in practice. So on the left, we have a picture of Texel Island in the Netherlands. It's a beautiful World Heritage Site, but it is at risk of rising sea levels. And in 2019, the existing dike was reinforced by a new sand dike and also planting of grasses to stabilise the land. And because this design was really cool and innovative, and it was on a World Heritage Site, it required some stringent assurances to get the local government approvals and also the buy-in of the community that lived there. And so this is a really nice example of where insurance enabled the construction of a nature-based solution. And on the right, Quintana Roo in Mexico is also a great example of pre-planning. And I'll let my colleague Mark from the Nature Conservancy share the challenges and experiences there, because there was a lot of pre-planning involved in this. But the benefits of the insurance program were realised after the event, which in this case was a hurricane. And the parametric design meant that funds were available for prompt recovery action. And this photo shows the teams being briefed after the storm before heading out to clean up the reef, which was funded by the insurance payout. I'll just talk a little bit briefly about the types of insurance, indemnity versus parametric, and whether or not these are, new words to you, or whether or not it's just a refresher of what you already know. But I think it's important to see what options are available out there. So along the top, you've got, the standard process of traditional indemnity insurance. And in the case of Texel Island, if there was a severe weather event, it would require the project owners to consider the damage, decide if they wanted to claim against it, and that loss would be confirmed by the insurer. Someone would come out and assess it, and then the claim processed for payment. But down the bottom, in the case of the Mexico Reef, the hurricane location and intensity was agreed up front, and the required payout was also agreed up front. So when the hurricane actually passed through the agreed location at the agreed intensity or higher, it automatically triggered the claim. So parametric insurance relies on objective, often public data, rather than a specialised assessment, on-site assessment, which is great because payouts can be as fast as 2 weeks, but it does also carry some risk that the damage may be greater or less than the agreed amount, which is called the basis risk. So in wrap up to my intro, I hope that I've given you some things to think about and how these concepts and examples could apply to your sectors and businesses. I'll let my colleagues in the panel talk more in detail about further applications of this, but I guess if there's one message to reiterate, it's that once you define and apply a value to nature, whether it's coastal, inland, or urban, then you can insure it like any other commercial asset or service. Thank you.
Thank you, Cherie. Really great introduction, and bringing some of those issues to light. And next, I'd like to introduce Mark Way, who's the director of the Global Climate Adaptation Division of the Nature Conservancy. And Mark, over to you.
Thank you very much, David. Yes, so building on Cherie's presentation, we thought it'd be helpful to sort of look a little bit more closely at what one of these insurance for nature policies actually looks like. And we're going to look at the Quintana Roo project that Cherie mentioned. And this was basically a project that started in the, I guess, in roughly 2014, 2015. And it began as a project to quantify that protective value of the reef for the coastal area of Quintana Roo, the state of Quintana Roo and the Yucatan Peninsula. And at the same time, this area has really been subject to sort of ongoing restoration efforts. And it was pretty apparent that one of the risks facing the reefs was hurricanes. So if you think about that investment in restoration, you could effectively lose all of that investment that you've made in the restoration project in a matter of hours if it's struck by a severe hurricane. We know from various studies that hurricanes can reduce live coral coverage on reefs by 50% plus in a matter of hours. So we began to think about, well, why couldn't you insure that? The points that Cherie made. Basically, everything behind that reef, all the hotel infrastructure, tourism infrastructure, private property, all of that is insured. They are valuable assets, and yet we have a very valuable natural asset sitting off the coastline. So why couldn't we insure it? So one of the major sort of ways of sort of taking that case to the local community was to emphasize again just how important that protective value of the reef was. And really, if you look here at the sort of central column and the right-hand side graphics, what we see is that whether you look at the protective value on a return period basis or on an annual aggregate loss basis, whichever way you look at it, that reef is providing very, very significant protection to the community and to the economy of that state. And what we were able to do as a project team, and I said the project team was pretty big, and it was a long project, and it involved friends at Swiss Re amongst many others. What we were able to do is really make the case that to really enjoy a healthy economy, to quite some extent, that depended on maintaining a healthy reef, because without it, you would very likely lose the beaches, or the beaches would suffer significant erosion. And without the beaches, then the sort of the economic model for that area is pretty much at risk. So taking that, just moving on to the next slide, taking that sort of information and quite a lot of other bits of information and having a lengthy stakeholder engagement process, that led to 2019 for this very first insurance policy being purchased. And as Cherie was saying, this is a parametric insurance policy. So it is triggered by wind speed. So if you look at that sort of blue area, anytime a hurricane track enters that zone with a wind speed of 100 knots or more, that will automatically trigger a payment. And again, as Cherie was saying, in the case of reefs, that is extremely important, because if you wish to give them the best chance of recovery, you have to sort of get onto them pretty quick. So you need that funding paying out very fast. And so this policy was introduced in 2019. It was renewed in 2020, and it's currently in the procurement process. And as you can see, it's got a kind of a stepped approach. So if sort of moderate wind speeds are recorded, there's a 40% payout. Severe damage or more severe wind speeds will cause an automatic payout of 80%. And then the sort of ultimate sort of catastrophic hurricane event would mean 100% would be paid out immediately. And as you can see, the sort of amounts involved here are by insurance and reinsurance standards relatively small, but that was really a function of the available funding at the time, and that funding due to reduced tax revenues during COVID last year dropped significantly, but nevertheless, the state government of Quintana Roo continued to buy the policy. So I think just moving on, what is really important, I think, to sort of recognize here is that this concept has three clear components. One is the insurance, and that's the one which attracts most of the interest. What's really important, though, is that having some form of underlying funding mechanism. This is called the Coastal Zone Management Trust. This trust was set up in 2018. It is designed to be able to accept funding from multiple sources. That funding is then designed to be used for ongoing maintenance of the beach and the reef, but also to buy that insurance policy. And if we move on to the next slide, what's sort of the remaining component is the capacity to actually use that funding. So in this case, that capacity is provided by the reef brigades that Cherie mentioned. This was a project that was kindly funded by Swiss Re Foundation. These are groups of 8 to 10 people. They are trained over a period of a week. They are certified. They then have to go through annual refresher training. They are permitted to work on the reef. And most of these are currently stationed in Mexico, but by the end of this year, we hope that there'll be 180 people, or Reef Brigade members, I should say, and they're going to be spread out across Honduras, Guatemala, Belize, and Mexico. And what their role is really to get onto the reef as soon as possible after damage has occurred. And what you can see them doing here on the bottom left is collecting broken coral to be reattached. Bottom right is using sort of buoyancy or inflation devices to be able to bring coral that's been knocked over back into the sort of vertical position. That's essential because if the coral is stuck in the sand, it's going to die. And really their aim is to sort of get onto the reef, assess the damage, remove any debris that's accumulated. And they are trained for hurricanes, but they have actually been in action multiple times over the last 18 to 24 months, looking at or just inspecting the reef after it may have been damaged by an anchor dragging or a pleasure boats hit it. You know, they will go out, they will check for damage, and they will make repairs as necessary. Next slide, please. And this has already been mentioned by Cherie, but I think, you know, the proof of concept really came last October when Hurricane Delta hit the region on the 7th of October. You can see on the map on the right-hand side, that little orange dot was where the Florida Hurricane Center confirmed that wind speeds in excess of 100 knots were recorded. That automatically triggered the payout. The payout arrived in about 20 days. And it was a 40% payout, which equated to something like $850,000 US. That's a significant sum in the context of Mexico, and it was the first time ever that an insurance payout had covered some of the costs of repairing a reef. So these reef brigades were deployed within, I think, 3 days. They had to wait for the water to become, or the visibility, underwater visibility to become good enough. They managed to sort of right and stabilize over 2,000 of those larger coral colonies. They collected and reattached over 13,000 pieces of broken coral and generally did a pretty stellar job. And now we sort of move into the sort of longer term restoration phase over the next 2 years. Next slide, please. So I think what we've really been looking at now is if this model works for one ecosystem, could it work for another ecosystem? And in the case of mangroves, we think, yes, they are a very different ecosystem with different requirements. It could well be that, well, we certainly think technically they are insurable. Interestingly, that might be with a combination of the indemnity approach that Cherie mentioned, plus parametric, because not all forms of damage to mangroves need to be dealt with immediately. But the same case, we're building the case for why this might, why we should be protecting mangroves. We're looking again at their risk reduction value, and it's pretty incredible. As you can see on the graph on the left, in many cases, the benefit cost, in the sense of the benefit of reduced losses compared to the cost of restoration, is significantly higher. So we think there is a good economic case here, and we're in the middle of working on this project together with colleagues at AXA XL in this case. Next slide, please. We're also looking to see whether we can really replicate or sort of scale this approach in terms of the risks that could be covered. This was work conducted with Bank of America and Willis Towers Watson in the case of Hawaii, looking at whether or not it'd be possible to design an insurance policy for coral bleaching. And we believe, again, technically it's possible. There's a lot more to it than just being technically possible, but it looks to be feasible. Also looking at whether sediment runoff following extreme rainfall might also be insurable. I think, again, both of those products look promising in the context of Hawaii, predominantly because coral bleaching is not has not been a long history of that in Hawaii right now, and both of these both of these hazards would be suitable for parametric types of covers. And just sort of what have we learned? I think the learning from this is that this Mexico approach has attracted a lot of attention. We do think there's potential to scale geographically, as mentioned, through new ecosystems, also potentially looking at new risks. We see now, and this is very encouraging, that other organizations are looking to replicate this kind of approach. So it's absolutely not just a TNC game or a Swiss Re game. It's many others are involved, and that's very, very encouraging. And we hope eventually that there will be markets. I guess the longer term vision here would be that any kind of restoration project, big or small, should have the option to insure against insurable risk, to ensure the financial sustainability of those investments. Equally, I think it's fair to say that this is not by any means mainstreamed yet. The general value of reef ecosystems and ecosystem services in general, I don't think are widely understood and very often not appreciated. These projects often rely on finding initial funding sources. And I think a very important point, particularly going forward, is the fact that many times reefs or mangroves, for that matter, are in locations where there is in any case low insurance penetration rates. So what is the business case for insuring a natural asset when your local communities may not be benefiting from insurance coverage? I think the answer there is probably increasingly that we'll have to look at covers that do both, cover individual people, their businesses, but also the natural habitats they depend upon. My final point is really that not so much in mangroves, but particularly in the case of reefs, we still need to develop the techniques and the science behind large-scale restoration. That's not really feasible to a large degree right now, but it's certainly something where there's a lot of work going on. And we hope that developments there will then allow more restoration to take place, since these assets are absolutely critical, not just from an environmental or biodiversity point of view, but also from an economic point of view as well. With that, I think that was the last one. Yeah, thank you. David, back to you.
Thank you, Mark. Really great information here, and starting to get into some interesting details on how this works and the potential for a range of other ecosystems that it could work on. So we'll certainly get into some of that in the Q&A as we go forward. So right now we're going to go to the next presentation, and this will be by Jacq Wharton, who's head of ecosystem resilience and in the climate and resilience hub at Willis Towers Watson. As you heard, they've been involved in some of this work that's been going on with parametric insurance and other insurance approaches, and as well as Claudia Ruiz from the MAR Fund, who's the Reef Rescue Initiative coordinator, will both be presenting together. So Jacq, over to you.
Thanks so much, David. I will just quickly introduce, I guess, what Willis Towers Watson is and does. Basically, we're a global advisory and broking firm, which means that we have expertise, especially around the design of innovative parametric insurance, but also kind of across the piece when it comes to risk management and insurance-related thinking in general, and how that can support the transition towards a sustainable economy, especially recognizing that many of our clients, including the MAR Fund, are beneficiaries and stewards of natural resources and ecosystem services. But I am first going to hand over to Claudia to introduce a little bit about the MAR Fund and the Reef Rescue Initiative, and then also we will we'll break down even in further detail a little bit of the work that we've been doing on the Mesoamerican Reef Insurance Program. And how our progress and I guess implementation on that is going. Over to you, Claudia.
Thank you very much, Jacqueline. Thank you all. Greetings. My name is Claudia Ruiz. I work for the Mesoamerican Reef Fund, and thank you very much. I'm honored to be here. And so, as Jacqueline said, we are going to talk about the Mesoamerican Reef, in the Mar Reef Insurance Program. And for some of you already may know what the MAR Fund is. The MAR Fund, or the Mesoamerican Reef Fund, is a regional environmental fund that we were created in 2004, and we have been designed to raise funds and to distribute funds in the 4 MAR countries. And this funding responds to the needs of the region. We work at the regional level. So within the MAR Fund, we have this long-term project, which is the Reef Rescue Initiative. The main objective of this project, this initiative, is to increase the resilience and the recovery of the MAR region and of the environmental and cultural services the MAR provides. Next slide, please. So the Reef Rescue Initiative, the MAR Fund, through this project, we have been able, in order to achieve the objective of increasing the recovery and resilience of the MAR, we have been able to create several instruments and tools. We have achieved this by working together with the 4 countries of the MAR region and with the support, the financial and technical support of different and various funders and collaborators and actors and partners. So these instruments include, for example, risk management instruments. Since we have been able to analyze legal and policy instruments, we have also been able to create a response protocol, emergency response protocols. One of these emergency response protocols is the post-storm protocol, which was created by the Nature Conservancy. Originally for the coast of Quintana Roo, then it was adapted, and then by working with them, we have taken this protocol to the rest of the MAR countries. This is one of the protocols that are already in place, and it has all the actions and activities that need to be conducted in the reef when the reefs are damaged by a storm, by a hurricane. Also, the MAR Fund created a ship grounding or vessel grounding protocol, and also we have a evaluation of the reef with the support of the BID, with the Inter-American Development Bank. It was possible to conduct evaluation of the reef that gives us, this instrument is giving us updated information in terms of the different values of the services, including tourism, fisheries, and coastal protection, which has to do with also with resilience. And in terms of capacity building, something related to what Mark mentioned before during his presentation, we are working together with TNC for creating emergency response brigades. These groups are trained, certified, and equipped in order to give attention to the reef when it is impacted by a storm or cyclone. And for that, they use the main framework, which is the post-storm response protocol. And so also we are also, in addition to that, we work with other partners in order to build and strengthen regional platforms. We have a main, very important platform, which is the Reef Restoration Network, which includes several experts, and several of the partners and brigades and governments are part of this Reef Restoration Network. Also, in terms of financial instruments, we have been able to create an emergency fund. The MAR Fund created this emergency fund for the MAR region. And as you know, we are working on the insurance program for the MAR. The next, please. So how all these work together? Our view is that all these instruments and tools are going to support, and if they are implemented, are going to support the response and the resilience of the MAR region. If we have the policy instruments, the adequate policy instruments in place, these instruments are going to enable funding, capacities, and governance. And by funding, we can use, for example, we need immediate funds for restoration, right? And the financial mechanisms such as the emergency fund and the insurance for reefs could provide these prompt funds for early action. This is the key word is immediate funds for early action, right? And through the early action means all this immediate response that we were talking before, the brigades and the response groups that can go to the sea and provide reef restoration after an impact. And by providing early action, we are contributing to the reef recovery and to the reef recovery of the ecosystem, right? That includes the provision of the services. And also we could have used this funding for as an income for the locals. Some people, such as the tourism providers or the fishermen that do not have any income during the event, can participate in the emergency response brigades, for example, and earn some daily income while they are not providing their services. And all of this together contribute to the community resilience. The next one, please. One of the main advances that we have had, as Mark mentioned before, and as I mentioned before, we are working in collaboration with the Nature Conservancy in order to build response capacities, emergency response capacities for the 4 countries of the Mar. The Mexico and Quintana Roo, they have brigades, response brigades since 2018 or 2019. But in addition to those brigades that already exist in Mexico, we are also training and forming new brigades. And also these main capacities are also training for the rest of the Mar countries. We have created 5 emergency response coordinated committees, and by 2022, our goal is to have at least 10 brigades formed for the 4 Mar countries. And in terms of we are also training trainers so that we can have this capacity building every year. And we can continue training more brigades and forming more people for the response. So in terms of the emergency fund that the Mar Fund created, we last year in 2020, after the impact of the Gamma and Delta and Zeta storms, we were able to provide a grant through a local NGO. And this grant was possible through this grant, it was possible for the response brigades that already existed in Mexico to respond to the impact in Puerto Morelos. So we actually achieved a very good stabilization of coral colonies and provided fragmentation and stabilization of the corals, of several species of corals, mainly acropora. So this was possible through the emergency fund. And the next slide, I think this is for me. Jacq, over to you. Thank you.
Thanks, Claudia. That was super helpful. So I am now going to talk about the insurance program that we're developing to support the holistic strategy of the Reef Rescue Initiative, as well as the sustainability of that emergency fund, which is already plugged in to providing immediate funds through a pre-planned kind of governance and planning process to that reef response immediately after an event. So especially as the restoration of ecosystems is often not a priority in the aftermath of extreme events, with focus especially on hard infrastructure and property, the MAR insurance program will offer a pre-funded framework to integrate the reef into those immediate response activities, but more importantly, support that financial stability of the emergency fund, which is already acting to do that. So there are 5 kind of critical steps to the development of the MAR insurance program and its implementation, which is actually underway currently. So the first relates to who pays and who is the policyholder. The who pays is especially interesting probably to all you conservation finance buffs, and you might have even better idea than I do. But I'll talk about this a little bit later. At the moment, we have some fantastic short-term proof of concept support funding from the Insure Resilient Solutions Fund, and MAR Fund really are the ideal policyholder in this case, especially as they already have the emergency fund to actually make sure that payouts are quickly implemented, which I'll also talk about a little bit. So we're also in the process of developing a sustainable premium financing strategy for the long-term who pays question, which I'll talk about in a little bit. But then steps 2 and 3 are what is covered and how much is needed are really about the insurance product design. So this program, the MAR insurance program, is designed to cover hurricane risk, just like the Quintana Roo product that Mark and Cherie talked about a little bit earlier. And this one is designed to pay out according to kind of high resolution, or at least site-specific costs of response at different levels of reef damage, which is captured as a function of hurricane intensity. So different hurricane intensities lead to, at different sites, will lead to different response costs, and we're looking to capture to capture those differences, basically, so that payouts are paid out when needed, but you're not paying premiums when you don't actually need payouts. And then steps 4 and 5 related to payout management and the actual implementation of the response are really critical to connect the financial instrument, the insurance instrument, to the implementation of actual reef response activities, which is what makes sure that this financial instrument actually has genuine on-the-ground impact and outcomes for reef and coastal resilience. So there, as Claudia discussed, there's really robust planning and governance related to these payouts management, which is really supported by the emergency fund, and then payouts are distributed to the emergency response groups that the Reef Rescue Initiative is working with at each covered reef site, of which there are many. So next slide, please. I mentioned that I would get to sustainable premium financing. So the MAR insurance program provides that mechanism for reef beneficiaries to quantify and finance the cost of maintaining the ecosystem services of the MAR in the face of increasing reef vulnerability. But sustainable premium financing is far from a given, which brings me to a much more the world of conservation finance outside of my comfort zone of insurance. So we've heard already that reefs provide critical infrastructure stimulating economic activity and coastal protection, and the policy, economic, and business case for protecting natural capital has really been pretty well established. A recent publication from the Inter-American Development Bank details the enormous value of the MAR to a vast universe of beneficiaries. So really this value in ecosystems and ecosystem services is in place for the MAR. Additionally, governments, business, and the finance sector is increasingly recognizing the importance of managing nature-related risks. So the policy environment, both internationally, nationally, and locally, is really in place for recognizing the importance of managing nature-related risk, which include the risk that environmental degradation posed to financial flows, as well as the natural and anthropogenic risks to ecosystems themselves. So ultimately, securing a sustainable source of premium financing for the MAR insurance program requires the translation of all of this business case and with the need and the use case and the benefits of the actual program into concrete enabling environment, which is those policy instruments that Claudia was talking about, and actual funding. So the insurance instrument obviously has tons of direct beneficiaries, from the NGOs undertaking the actual response to businesses providing equipment and the people in the brigades, and the indirect beneficiaries are even more numerous. So governments, businesses, millions of local people that benefit from the ecosystem services that the reef provides. But ultimately, sustainably financed risk management of the MAR will take 2 steps that we're in the process of implementing. So first, we have to communicate that strong and well-defined business case. And then second, we really have to successfully engage with the many beneficiaries to actually translate the business case into concrete funding. So this means developing the mechanisms, the mechanisms through which reef beneficiaries and stewards can actually aggregate long-term premium financing and collectively support the financial stability of the insurance program. Anyways, so this is our ongoing challenge, but really the insurance is not the sole solution to a nature positive market economy, but this insurance really does direct financial flows towards the maintenance of natural capital, specifically the Mesoamerican reef, critically reducing the impact of lost ecosystem services and providing basically a framework and financing mechanism to clarify risk ownership. So how do reef beneficiaries share the risk to address a post-event funding gap? And then how do these beneficiaries actually pre-position a predictable and timely flow of funds to restore the ecosystem services ultimately and build the resilience of communities? Thanks.
Thank you very much, Claudia. Jacq, and everyone. So I have so many questions, and I'm going to ask you a few. So maybe we could take off the PowerPoint, and we can all have us on camera. If you on the top right, there's a view button, and you can choose to view a gallery. That way you can see more than one speaker. Otherwise, you have the speaker focus, and whoever's talking gets center stage. We'll move after my first few questions. We'll move to a Q&A session. So for those who are joined us here, I think you all are probably familiar with how this works. We do request that you type your question into the chat box, and then I can call on you, and you can unmute yourself. You can turn your camera on or leave it off, up to you. And you can also raise your hand too. I think we could just in the reactions option down at the bottom, you have a raise hand, and we can also call on you directly if you don't want to type your question in. Okay, I didn't give much of an introduction in the beginning because I wanted to get right to the presentations, but I see one of the main values of nature to be risk reduction. Extensive forest and diverse habitats provide enormous risk reduction services. They can help avoid flooding. They can help, avoid disease. It just goes on and on. So coral reefs are beautiful in that the risk reduction has been very well documented, and it can form a really great case for exploring how to monetize, if you will, the risk reduction value of nature. Now, I know, and Jacq was saying how it's kind of a challenge to find the premium payers here, and we have to look at that economic valuation piece. But I thought, Cherie, if we could maybe, if I could ask you the first question, just what's your perspective on this, the overall issue of how do we better incorporate risk and the value that nature provides in reducing that risk into our business decisions and financial markets, and how can insurance maybe play a better role there?
Yeah, thank you. I guess if we step back and even just talk about, I guess, Swiss Re's, broader mission and perspective, and one of the reasons that we're so focused on sustainability as a topic, and which includes the protection of nature in terms of risk reduction, is because we can see the impacts of climate change. We can see the events getting more frequent, more severe, more intense. And if we actually don't start talking about this, if we don't start raising awareness and taking action, we're actually going to get to a stage where we're going to have issues where events aren't actually insurable anymore, and we're going to have issues of affordability and access, and we don't want to see that. So on a broad scheme of things, this is why it's also very important to us as an industry to make sure that, nature is protected as an asset for its risk reduction. And then there is also a growth opportunity there. There's a growth opportunity there for investment, for this completely exposed asset as well to be protected. And what I guess we'd love to see is that, the slide that Jacq put up to show, all of these fantastic initiatives for measurement and assessment, it's so cool, but it's still got a ways to go, right? And you imagine that, one day we'll get to the stage where it's just so normal that, right now you have, you insure your house if you've got locks on the windows, if you've got a smoke alarm, you'll get the discount and the risk assessment. If we can get to that same stage where, the mangroves are counted, where the actual benefits of nature are actually involved in standard risk assessments, that would just be really wonderful.
Yeah, that does seem to be a great goal, but it falls prey to the general problem of nature management, and that it often is shared resources, and it's hard to allocate rights and ownership and responsibility in a way. So that's what's kind of nice about the parametric insurance and the emergency fund that, kind of like says, okay, we'll take responsibility, we'll address these. But maybe go into Mark here, just you've been looking at, you're starting to expand into different kinds of ecosystems of mangroves you've mentioned before, may have a different need for financing. Any insights into where this could go in the future, and responding in a way to what Cherie was saying about how we can responsibilize those that benefit from the risk reduction that nature provides, and get them to invest more, or pre-invest. Any thoughts there?
Yeah, thank you, David. I mean, I think several thoughts, but I think fundamentally what we see, I mean, as you're certainly aware, so many of these natural systems have been degraded over time. We've lost probably 30 to 50% of coral. We've lost 50% of mangrove coverage for sure. Lost probably 85% of oyster reefs, and yet the protection value is still there in spite of having lost those systems. So there is just so many benefits to actually thinking about how we could restore those systems, both economic or obviously from a biodiversity point of view, and we have to look at the mechanisms that can do that. And right now I don't think they are in place, because most of the funding for this kind of work is provided on a philanthropic basis or a public sector basis. So I think if we're going to be successful at scale, then we've got to have the private sector coming in. And I know when we talk in the conservation community about market forces and creating new markets for these kinds of commercial products, not everybody likes that. Which is okay, but I think it's really going to be essential if we are to get to scale in protecting these systems and restoring them in a way that we need to do. So I think there's, as I say, a lot of work going on there. I mean, the organizations on the panel are very much at the forefront of this. As I think Cherie said, we hope this gets to the point where this is completely plain vanilla. This is just like waking up in the morning and saying, I've got to renew my car insurance. You literally go and renew your coral reef insurance. It just should become that straightforward, but we have a very, very long way to go. But I think the signs are encouraging. The work that MARFund are doing now with Willis is fantastic. That's hopefully going to be not long before we see at least one more product, maybe several more products on the market. We hope that's going to generate a huge amount of interest and get a lot of other organizations saying, how can we do that? How can we follow that kind of lead? Because it's going to need a lot of organizations in this conversation. And there are a lot in it, but we've got to take it from a conversation to actually delivering stuff on the ground. Back to you.
Thanks, Mark. In that line, over to Jacq and Claudia, maybe, two things. One thought that I have is that, car insurance, you renew it because you have to. You can't drive without it. So there's a mandate, and it'd be interesting. And I keep emphasizing the role of government in conservation finance. We even want government in private sector finance. We think, oh, it's the private sector. No. Government has to come in and set the rules to encourage the private sector to invest, to set asset values and responsibilities and rights. So probably the same in the insurance sector. So what do we need then to prove that these pilots are working in a way that could convince both government and private investors and private actors to use them more? Jacq, maybe, and Claudia, what's success look like, and how do we get there?
Oh, that's a great question. But I think that the key thing is we need more kind of track record, more proof of concept. So right now we've got one great example, and we're working to implement another great example. But I really think that so the backbone of the kind of policy and business case is there, and we need the kind of proofs of concept to loop back and provide the evidence that actually, first of all, we have significantly reduced risk to ecosystems. Like the response really does have conservation and community resilience outcomes. Some case studies about how, response was undertaken and, who benefited, for example, as we're trying to implement a kind of next step. As much information about, who finds material benefits, and really pushing that information out also can really help us then as a hook for look, this really has had an impact in this and that way, and it could also do for you. But Claudia, I'd be curious what you think, especially thinking about how this kind of new mechanism fits into a holistic framework that you've been developing for a super long time.
Yes, I also would like to add, in addition to Jacq's comments, I think that what we need also is to prove like the payout gets immediately to the ground, right? It's like the insurance pays, and this money, as I mentioned it in my presentation, is immediately go into the emergency response. So for that, we need like a very expedite mechanism and transparent, right? Transparent, because we are working also with the governments, and the governments need to know that the money goes to the sites. So I put out those two things, like immediate funding, that it actually pays right away, and through a very transparent mechanism, and working with the governments at the local level also, and including the communities, the communitarians, like the fishermen, for example, in our brigades are many fishermen and tourism providers, and also building a network or allies, a network or a backup network, that can provide, that includes the private sector, and that also they can provide probably not funding, but also other resources like equipment, food, management, a site for the brigades to gather, right? And as I mentioned in my cycle, that round that I showed in my presentation, we need to inform the governments about the value of the reef, right? The value, the current and updated value of the reef, and so that they can make the decision and include the reef as an asset into their policies, the risk management policies and the budgets, right? Those, thank you.
Great, thank you, Claudia. Appreciate all your responses. I'm going to pass it over to the audience here, and remember, just write down your questions in the chat or raise your hand. So going to pass it over to Mark, who put in a couple questions. So Mark, Popol, over to you.
Oh, okay. I typed my questions into the chat, but was interested, Cherie, you guys are in the business of making money, right? And you had a payout 2 years into this project. How do you think about premiums going forward? And how do you think about pricing hurricane risk with all the uncertainty that climate change brings?
Sure. Yeah, look, I mean, we're a private company, we're shareholders, we're in the business of making money, but we're also in the business of paying claims, right? And that's what, the insurance industry is here for. And so I guess just to reiterate what we were saying earlier around what's needed to actually, scale and accelerate this as a proof of concept, it's not just having the project, it's also about paying the claim. And so, it was actually a great opportunity, when Delta came in to actually be able to see, the proof of concept in action. And, whether or not it's Swiss Re or whether or not it's another insurer, whoever's going to hold the policy, whoever's going to quote for the renewal, the pricing is always about, I guess, the probability of loss, right? And it's also about the value of the assets. And so it's always interesting to see how a client's perspective will change after they've had the claim. So particularly when, they've actually been able to reflect and take action. Did they have enough coverage? Did they have too much? Do they need to actually adjust the levels? So that will go into the design. But talking more broadly, I guess, about the risks of climate change, yeah, as mentioned, we do see it increasing. We do see you know, the severity increasing. And there are a plethora of extremely smart people in our organization and some very elaborate models that do a lot of, you know, kind of forecasting and assessment here. And that's why, you know, we release a lot of material that shares kind of the insights and the warnings on this, because, you know, as I said before, if we actually don't start doing something, then we are going to be in trouble. And that's why we'll lead by example. We've got our own 2030 net zero commitments. We want to see all of our, you know, underwriting and asset management portfolios also net zero by 2050. And that's how we'll also impact our, I guess, our pricing and portfolio steering, by making sure that we are only protecting and investing in organisations that are actually, you know, acting to support climate change.
Thank you. Mark, I believe you had another question for Mark as well. You're welcome to ask that, since no one else has raised their hand as far as I can tell. So
the benefit of being the first in, thanks, Cherie, for that response. And that actually leads, kind of segues into my question for Mark, and that is, you know, were you able to restore the reef to its pre-hurricane condition with the $850,000 payout? And how do you think about payouts versus cost of restoration, since coral restoration is still less than, has not been proven to be scalable, and some would argue is still kind of embryonic. So how do you think about that? But first, you know, from, you know, as a client, were you, you know, were you happy, and were you able to restore the reef for the $850,000?
Yeah, thanks, Mark, for the question. I mean, first of all, just a clarification, we weren't the client. The client was the trust fund. And so, yeah, we are not involved in that decision around the insurance purchase. But I think what we should probably say right up front, and I think I mentioned this actually, is that the approach to buying the insurance has been taken by the Quintana Roo government, and the trust fund has been very much, you know, look, how much funding do we have available, and how much insurance does that buy? It's not necessarily been approached from the other way around, like looking at how much you actually would need in an ideal situation, and then funding that, because the funding at the moment is not available. How much will that funding actually cover in terms of restoration? I think on one side, that's not yet clear, because the stage that the process is at right now is that the trust fund is considering proposals for how to use that money. So we will know more about that, I think, when we see what the decision is about how that money will be spent. But I think, you know, in general, and again, worth sort of just noting, is that we actually talk about repair. We don't talk about restoration as such, because that can mean different things to different people. The concept behind insurance is that you should have the funding to repair it, or repair the damage, which is really what we're looking at here. But you know, as I mentioned, that process now, the initial repairs, if you like, were made by the reef brigades, but the longer term recovery of the reef will probably take another couple of years. So I very much doubt that would be enough funding to cover everything that needs to be done on the reef. But I think the reef will be in an enormously better position than it would have been, since this is probably it is the first time ever that any insurance policy is paid for the sorry, I'm using the term myself, for the repair of the reef. So yeah, all in all, I think we'll be in a much better position than we would have been otherwise. But we'll need to wait and see how that recovery process, what actually is included in it, and how it works out over the next couple of years.
great, thanks, Mark. Mark and Mark, thanks for the questions and for the responses. We're pretty much at the end here, but I wanted to give the microphone to Simon Young, who I hear knows a few things about insurance as well. So Simon, over to you.
Thanks, Dave. Yeah, I wanted to kind of bring out a little bit the point that there's a big wide universe of insurance and reinsurance providers out there. And one of the things we're really concentrating on is to bring as many of those to the table as possible, because that has a big influence on the pricing. Obviously, the underlying risk is needs to be assessed, and the climate change impact on that. But that climate change impact is the same or very similar to what it is for all cyclone risk globally. So it's something that the insurance and reinsurance markets, particularly reinsurance markets, because they hold most of that risk, are very familiar with doing. And they do it in different ways between the different companies. And they are all trying to make money ultimately. But if you have 10 of them at the table instead of 1 or 2, then it's very likely that you're going to get a lower ultimate cost of risk transfer. So, I think the early work has been absolutely necessary, and it's set us off on a path. But we really need to think about how we expand that path, and expand the number of kind of actors who are willing to do this stuff. So I think that's one point. The other point, and to your other question, Mark, really was that I think we have to not consider this as kind of insuring your house for the whole of its value. That's really not what we are able to do. Mark Way and I had a conversation probably 6 months ago about what insuring the Hawaiian reefs would what the limit of that cover might be, and the number was astonishingly big. And then we kind of stepped back a little bit and said, well, how would you possibly spend that money? Because we simply can't at the moment. So the coverages, look very modest and are very modest from a global perspective. But I think we have to build slowly and make sure that the money, as was just discussed, is used wisely, quickly and effectively, because that's where the value is of having insurance. You have to get the actions to be well implemented, to show that it has value. If we don't do that, then it's not going to expand. If we do that, then I think it will gradually expand, and not only for reefs but across other ecosystems as well. Thanks, Dave.
Yeah, thank you, Simon. Yeah, I think sorry, go ahead. Jackie?
Can I just add to my esteemed colleague Simon's comments that in addition to thinking about, I guess, how would you possibly spend what those limits look like, is sort of the flip side of that, which is why working with really locally and regionally embedded organizations like Claudia's and the MAR Fund is super beneficial, is that they're starting with the what do we actually need funds for question, rather than the what can you design an insurance mechanism to pay out for. And I think that that's a really powerful shift in perspective, because even if then what you're trying to fund isn't necessarily insurable in the market, there's a lot of risk management thinking that can still support those needs, as you've seen by the kind of MAR Fund holistic way of thinking about sustainable financing for reef resilience. So I would really encourage to always be thinking about, okay, well, what do we really need funding for? And I think that that's really at home with the kind of conservation finance approach in general.
Yeah, great point. And because we always say it takes a mix of mechanisms, that there's no one single mechanism that's going to solve all your problems. That you need to think, and so in a way you're combining self-insurance with insurance products to a certain extent. If you have a trust fund and an endowment, and you're using investments and all kinds of different tools to kind of produce a stream of financing that can invest in the reef, over long term, as well as buffer the insurance provides a buffer for extreme events. And so you're combining tools in a way that achieves your needs, addresses your needs, and achieves your goals. So, well, we could continue talking about this for a long time, but we've gone a bit over, and I just want to thank all the panelists and all the participants for joining, and really great conversation at just the beginning. I think there's so much more to explore here. And I wish you all the best of luck with your endeavors and pilots, and let's get the proof of concept out there and get, as Simon was saying, bring all the participants out there and get this thing more mainstream. So thanks everyone, appreciate it.
Thank you.
Thanks for your wonderful moderation, David.
Thank you.
Have a good day.
Bye now.
Thanks, everyone.
Bye-bye. Bye, everyone.